Despite the global lockdowns that came with the emergence of the COVID-19 pandemic, it's evident that there's been rapid growth in wind and solar photovoltaic as renewable energy sources. According to the International Energy Agency, the United Nations Change Conference COP26 held in November 2021 shone the spotlight on the reduction of carbon emissions and the use of clean energy. COP26 goals for 2030 include accelerating the phasing out of coal, preventing deforestation, speeding up the switch to the use of electric vehicles and encouraging investment in renewables. In 2021, China was the global leader in renewable energy installations, and according to IEA predictions this will continue for the foreseeable future. However, an increasing number of emerging markets are following suit. Mobilizing the world to be on track with COP26, a target of net zero emissions by 2050, will need an investment of $4 trillion a year by 2030. This will allow for the accelerated transition into clean energy. There's huge growth expected in clean energy technologies over the next decade in IEA's net zero emissions by 2050 scenario, which is likely to lead to this renewables market being worth a cumulative $27 trillion by 2050. The combined renewable energy market includes wind turbines, solar panels, lithium-ion batteries, electrolyzers, and fuel cells. It's predicted that by 2050, there'll be about 3 billion electric vehicles, EVs, globally. This will see batteries grab 60% market share in the clean energy technology equipment sector. Tesla, a US-based electric vehicle and clean energy company. Tesla's shares have had a great run in 2022, up 27% this year so far. In its second quarter figures posted in July 2022, the company quoted on Nasdaq marked its record month of production, making 258,000 cars. This was despite dealing with supply chain issues, labor shortages and factory shutdowns in Shanghai due to COVID lockdowns. Its new Gigafactory in Berlin is now producing 1,000 cars a week, and the company says the second half of 2022 will be a record. It eventually expects to ramp up vehicle deliveries by 50% each year and is well funded, with $18 billion in the bank. Musk's recent abandoned attempt to buy social media company Twitter has weighed on Tesla shares. Investors voiced concerns that the controversial entrepreneur has been distracted from focusing on Tesla as a business, in addition to planning to use Tesla shares as collateral. Verbund, Austria's biggest electricity producer, may be worth a fraction of Tesla but packs a punch. Shares in the clean energy company have been on a seemingly unstoppable trajectory since January 2020 and have been boosted by the Europe-wide hike in wholesale electricity prices. The company produces 33 billion kilowatts of electricity each year from hydropower in Austria and Germany. Around two-thirds of Austria's electricity now comes from harnessing energy from water, and Verbund supplies the majority of this in the country in Bavaria. In its first half results in 2022, the company enjoyed a spike due to the strong increase in sale prices for hydropower, up 66 euros to 113 euros megawatts per hour. Verbund expects full-year group result earnings of 1.7 billion euros and 2 billion euros. It plans to deliver 45% to 55% of this to shareholders in dividends. Meanwhile, the company is investing heavily in clean energy infrastructure across the continent, including the hydrogen economy, and looks set to play a key part in the move towards renewable energy across Europe. Over 10 years, the Danish company Ørsted has reinvented itself from being a fossil fuel-focused energy business to a renewable energy provider. Ørsted was previously heavily coal-intensive, but is now one of the world's leading offshore wind energy providers and one of the biggest renewable energy firms by capacity across the globe. This summer, the company won a contract from the UK government for the world's biggest offshore wind farm, the Hornsea 3 off the coast of Yorkshire. The project will have a capacity to power 3.2 million homes in the UK. Ørsted has also acquired French and German offshore wind platform Ostwind. Half-year revenues rose 50% to $2.7 billion. Management expects full-year earnings of $2.5 billion to $2.9 billion. This excludes any impact from new partnerships, such as the Greater Changhua project in Taiwan. Another of the world's biggest offshore wind farm projects has been hit by delays from COVID lockdowns, however.